Good morning. I'm Richard Calhoun, Creekside Realty, 40 years of working with buyers and sellers here in Silicon Valley. We're here today to talk about week number 46. We will come back to these URLs. This is the first data slide. It really tells you everything you need to know, maybe not in the best way. What you have is the total inventory, the total number of listings that are available for buyers to purchase. That's this blue line. And you can see it basically started off the beginning part of the year at 140% of where you'd expect it to be. Then we quickly got down to 100%. Then we quickly got down to 80%. And now we're basically at 60%. So there is less inventory out there than you would expect. This is inventory in Santa Clara County, San Mateo County, single family homes, condos, and townhouses, all in one big blender. What I'm using for my expected levels are the median of 2015 through 2019, which were 5 good years. What's coming into the reservoir? And that's the gray line. And when you really look through the noise, these big peaks up are the major holidays. You have Memorial Day, you have July the 4th, and you have Labor Day. And that's just because with COVID, people are treating holidays less significantly. Real estate's an optional event, so there's more people available to continue doing the optional event of real estate. And that explains these huge spikes. But when you really look at it, it's basically bouncing on both sides of 100%, the yellow line. So the number of sellers coming on the market in any given week is essentially exactly where you expect it to be. Now that we're getting into the end of the year holidays, which are less significant, so fewer sellers are getting distracted by the holidays, you can see that the number of new inventories has been increasing and has been consistently above the yellow line, the 5-year median, basically since shortly after Labor Day, maybe basically October 1st onward. And I expect that trend to continue. As COVID becomes more in the rearview mirror, hopefully, then holidays will become more significant again, and we'll get back to the regular pattern. The flip side, which is the red line, that's the demand side. That's where the real story is. And if you really look through this, yeah, there's quite a bit of bounce in it. But the takeaway is it's somewhere around 120% of the 5-year median. So we have normal inventory. We have 20% more demand for that inventory, and that's what's giving us this rapid, fast-paced marketplace that we're in. This is the single biggest indicator, and it's simply the supply-demand ratio. I call it days of unsold inventory. How long would it take to sell all the existing inventory at the existing rate of sales? The yellow line is the raw data of the 5-year median, and the blue line is the current year. So you can see that normally you accelerate very rapidly, and by accelerating, the lower the number of days of unsold inventory, the quicker the market's turning over. So you can see the market accelerates very quickly coming out of the end of the year holidays. And then basically around springtime, when sellers start coming on the marketplace, normally the market slows down. This year, the market just continued right on at that fast pace, and at a very fast pace, somewhere right around 20 days of unsold inventory. And then we had a slowdown basically in July and August, where we actually slowed down to maybe 25 days of unsold inventory. And now we've caught back up to 20 days, and now we're basically even down. And I think that may be where we go if we continue to have more buyers continuing to look for housing during the holidays with not as many sellers coming on the market, even if there's more sellers than normal. It appears that the buyers are leaving the market less rapidly than the sellers, both of which are staying in the marketplace more than they normally do because the holidays are less significant. But right now, in the current week, we're somewhere around 18 days of unsold inventory, which means everything on the marketplace would sell out in 18 days if no new listings came on the marketplace. And clearly that wouldn't happen because some places are overpriced and aren't going to sell. This is looking at the sale price to list price distribution for each week, and it starts seeing the pressure the buyers are feeling. So the more pressure the buyers feel, the more this line goes up in the direction of the broad red arrow. And what you can see is the purple line coming down through here is the current week's data, and it's basically right at the top of the marketplace. So it's been the best week of overbidding from a seller's point of view in the last 22 weeks. And last week, if you were listening, you'll notice that I talked about the line slope of that line changing because it started up here near the top and then it got down towards the bottom. And now we basically have the return of the normal slope. And what I'm thought about that when I caught that is I'm wondering if the properties that when the market shifts, because these are closings, this isn't, homes that were negotiated last week because we don't know the sale price. So these were homes that were negotiated essentially 5 weeks ago. And what I'm thinking is potentially right as the market is shifting, the people that are buying the more expensive homes tend to have the ability to close more rapidly, and therefore the higher end of overbidding may show up more rapidly and a week or two earlier, and that may be why we saw that shift in the slope. It's the first time I've noticed it, and I think it was for 2 weeks. I'm going to keep an eye on it. That would be a reasonable explanation, but the normal slope of the line has returned, and it is outperforming basically any of the 22 weeks that are on the graph. This will get into a little bit more detail, but it's to show you what's available. It basically allows you to go down and pick whatever micro market you're looking for, find out the key indicators, days of unsold inventory, the frequency of overbidding, how common is it, and the magnitude of overbidding. And on the magnitude of overbidding, I quote the average. And, I do acknowledge that normally median is a better indicator when you can go from some fixed number to infinity, which is the case for the magnitude of overbidding. But the problem with the median is it's almost always going to be at 100%. I track the average, but you have to remember the average tends to be skewed by a few people paying, 50%, 200%, 100% above, 50% above the asking price when the bulk of them are more down around the 10 or 8% level. And in one micro market area I was looked at, the average overbidding was 11%, but the median overbidding was 4%. So right now for the entire county, the average overbidding is about 9.5%. The median overbidding was quite a bit higher than that, and I do have that later in the presentation. And I think it was something like 107%. So you just need to keep track of what data we're doing. And the last indicator is simply the price, and that's to give people an idea of what the different price ranges are. So that's the quick recap. We'll do the root URL is the screen URL, and we will be coming up to a new year in the not too distant future. I don't know if people like this RE for real estate market graphs, or if they would prefer I shorten it to REMG for real estate market graphs. I tend to not like abbreviations, but I will also acknowledge it's pretty long. To get to the live presentation, you add the year, which is currently 2021, to the end of that. If you want to get to the specific archive, you put in 2021, the year, the 2-digit month code, which is currently 11, the 2-digit date code, which is currently 20. So it'd be 2021, 11, 20. And the handout is posted. So you can type in the root URL, the word handout, and today's date in the 8-digit format, and you'll get there. And I don't think I said it, the base URL by itself gets you the YouTube channel. I'm open for any questions before I continue at a slower pace in the details. Not hearing any questions, I'll proceed. Here, what we're doing now is instead of looking at it as a percentage of the 5-year median, we're looking at the raw count. So the yellow line is the raw count of the number of new listings you expect in any given week based on the 5-year median. And the blue line is the number that actually came up. So you can see that there's a very strong correlation between the two. You have a shift here on Labor Day because Labor Day came a little bit later this week than it did over the 5-year median that I'm using. You might argue that the blue line is now above the yellow line, and I would actually agree with that, which means a few more sellers are coming on the marketplace. Whether this trend continues or not is anyone's guess. It's not that significantly above, and it doesn't surprise me because, again, real estate is an optional event. The 5 years that I'm using are all pre-pandemic, 15 through 19, and so more sellers would have been hesitant to come on the market going into the holidays. Now they're less hesitant, and so we're seeing a little bit more sellers come on the marketplace. This is the number of active listings currently on the market without a pending offer on them. So this is essentially the level of the reservoir. So you can see that the raw count started out higher at the beginning part of the year, rapidly dropped down and became right at the level you'd expect it to be. Then it started dropping below the level you'd expect it to be, and now it's significantly below. That might be 1,025. You come up here, and that might be 1,425. So you have 400 less listings than you'd expect to have. And then a year ago, you're up here at something like 1925. So you had 500 more listings. So we went from 500 more listings than you would expect to 400 less. So you've had a shift of 900 listings available when your normal is only some number around 1425. That's huge shift in the available inventory, and that's what buyers are sensing out there. This is the number of new offers. The blue line is the current raw data, and the yellow line is the 5-year median raw data. And again, what you can see is consistently the blue line is above the yellow line. Yes, there's the holidays where it wasn't there, but that's because the holidays, when you're looking at a 5-year median, gets washed over between 2 different weeks, where when you're only looking at 1 year, the current year, it only happens in 1 week. It's just the way you present the data. Unfortunately, I feel quite comfortable saying in 2021, the entire year, we have had more new offers accepted every week than would be expected based on the 5-year median. And again, those 5 years were 5 good years, 2015 through 2019. This is looking at the days of unsold inventory over time in the 3 major micro markets, which are single family homes in Santa Clara County. That's the red line down here. Then you have single family homes in San Mateo County, sort of the brown line. And then you have condos and townhouses in the yellow line in Santa Clara County. And you can really see that Santa Clara County came down basically here middle of July. It slowed down a little bit, then it came back. And then basically starting here in November, maybe even mid-October, it's just been plummeting. And that plummeting is, from a seller's point of view, is a good thing. From a buyer's point of view, is not. It's plummeting an increasing speed of the marketplace. We were here, somewhere right around the middle of October at 20 days of unsold inventory, and now we're down here somewhere around 15. Going from 20 days of inventory to 15, it may not sound like a lot, but considering that a lot of sellers won't look at offers for some period of time, be it 5 days, 7 days, you can't get down to 0. And in fact, I say it's going to be very difficult to get below 5. And so going from some number like 15 to some number like 10, that becomes more significant, and that's closer to what you are. This is the heat map showing you the different micro market areas. The redder the color, the faster the marketplace. And if you just look at the numbers now, a lot of these areas are into the single digits, and that's basically the bulk of Santa Clara County. Yes, you have South County at 19 days, you have East San Jose, Central San Jose, and South San Jose at 20 days. Then you have basically the bulk, the heart of Silicon Valley at 9 days, and that would be everything from Milpitas, North Valley, Berryessa, Santa Teresa, parts of Evergreen, Santa Teresa, Blossom Valley, Cambrian, Campbell, Santa Clara, Willow Glen, Cupertino, and Sunnyvale. So that's the whole center part of the valley is sitting there right around 9 days of unsold inventory, which is just insane. Saratoga and Los Gatos is at 16. That's noteworthy. Not that it's fast now, but that is usually one of the slowest areas along with South County. And I consider a balanced marketplace for those 2 micro market areas to be 75 to 150 days. And they're sitting now at only 20 days. And just for completeness and rounding it out, you have Los Altos and Palo Alto at 16 days, and then you go up into San Mateo County, and I won't do it. San Mateo County is a little bit slower, still very aggressive, still very red in color, except if you get out to the coast, the expensive areas on the border. This is the frequency of overbidding, how common it is to get overbidding, and you can see we're basically been bouncing between 75 and 80%, and right now this particular week, we were close at 80%. Last week, we were closer to 75. It bounces quite a bit each week, a little bit more than I would have expected it to bounce. And this is the 3 different major micro market areas, the ones that we've already talked about. So Santa Clara County single family homes, there you're getting about 80%. You can see it's been relatively flat. San Mateo County is also now at 80%, but it's been doing more volatility. It caught up to Santa Clara, then it went significantly slower or less common overbidding and then back up. And when I said significantly lower, it's at 75% versus 80%. I'm not sure that's a significant difference, but it does show up on the graph. And then the yellow line, the gold line, is Santa Clara County's condos and townhouses. And it appears right now to be in a free fall, but I'm not too worried about that, because you're still at something like 66% of the sellers are getting more than their asking price. This is the frequency overbid heat map. Again, the same concept. The redder the color, the more frequent it is to overbid. And just an observation over here on the coast, when you're looking at the frequency of overbidding, it's a fairly good red color. It's at 75%. But when you went back to the days of unsold inventory, it was pretty neutral in color, because I think the days of unsold inventory were maybe right around 35, 38 days, something like that. So every one of my indicators doesn't move together as if they were glued together. It moves together more like they're connected by slinkies or springs in their blocks of wood. This is the magnitude of overbidding. This is how common. This is the average. So you can see the average overbidding now for the entire micro market area is almost 9% above the seller's asking price, where just a couple weeks ago you were down to 7%. And again, this has more fluctuation than I would expect, but that's the data. And it's consistently has more fluctuation. It's not something that's happening right now. It's just, I would have expected more stability in a data point like that, but apparently not. This is the heat map of the different areas, the same concept. The redder the color, the higher the overbidding tends to be. And this is based on single family homes. I don't plot out the graph of condos. Now we're back to this graph that we talked about. So now out of the last 12 weeks, you can start to clearly see that the purple line is way better than any other line. The dark orange line here, that was just last week. So you can see the amount of improvement, and you can see how the slope of the line was much steeper just last week, and now it's back to the return to the normal shape. And then the gray line is here. And again, a little steeper because you're sort of in the middle of the pack, and then you're down here sort of towards the bottom end. So my hypothesis that I haven't really done much investigating on is this is sort of the first week, this gray line, which would have been November 6th. And because if you just go back to October 30th, that's the brighter yellow line here, and the slope of that line's pretty similar to the purple line. So basically, starting on the 6th of November, the line sloped increased. And my hypothesis basically is that means about 4 weeks ago, the market started to heat up, but people that were paying cash, people that had high down payments that are able to overbid more, started to push up this upper end, which explains why the gray and the dark orange line are towards the top of the graph, when the rest of them is sort of more in the bottom, or even to the middle or towards the bottom. And now we're back where the full marketplace is closing at what people sensed now 5-6 weeks ago. And so the whole line has returned to the more normal shape. That might be a way of indicating it, but I think it's pretty fuzzy, and I'm not sure it's there. So, it's just sort of an observation. This shows you the median price in the middle. So the middle number here in, say, Saratoga, Los Gatos is 3.6 million. The cheapest homes in Saratoga, Los Gatos are 2.3 million, and the 90 percentile homes are 5 million. So you can get a price range in each one of the geographical areas. The blue colors are below the median, the red colors are above the median, and the median tends to Redwood City area. So sort of Redwood City here with 2 million, that is probably the exact median and typically is. And then you can see San Mateo County is slightly above and Santa Clara County is slightly below. This shows the pricing over time for the 3 major price points. Something corrupted my data here for San Mateo County single family homes. So instead of showing a garbage data, I just deleted it. No real takeaways other than you can see you came up in Santa Clara County single family homes. You overshot a little bit. We came back down, then we came back up, and now we're basically settling down. So it's my belief that what we basically do is have last year's prices. We hit the beginning part of the year. We very rapidly get up to this year's prices. People aren't willing to believe that. So they get into this overbidding period of time, typically in April, March, May. And then we come back correct and we find out where the price level for the year really is. So in my opinion, we really have a step function increase that occurs basically over the New Year holiday. So we're not that far away from it happening this year. And then in reality, what happens is the prices go up very rapidly because the appraisers, for example, won't do a step function increase on you. This is showing you the major components from this week to last week. So this week we're at 42% of the 5-year median for Santa Clara County single family homes. And this really lets you see the difference because single family homes in San Mateo County is at 76%. Both are down from last week, but you can see there's a greater shortage of homes in Santa Clara County with only 42% of the inventory you'd expect than in our neighboring county in San Mateo County at 76%. And that's going to impact what you have. So yeah, it's nice to put everything in a big blender and talk about what the market's doing, but that really doesn't apply to what's happening in any given micro market area. A good example is the media. The media looks at the 9 counties that touch the Bay and reports on what's happening to the Bay Area real estate market. And that has nothing to do with what's happening in any given micro market area or any given county, because it's the blended data and not what's happening in any given area. And then you get down to condos and townhouses. It is noteworthy that San Mateo County actually has a surplus of condos right now, and it has for most of the year. Last week it was 200%, now it's 175%. I do need to clarify that isn't the entire county, it's the Bay Cities. The reason I do the Bay Cities is there's not that many condominiums outside of the Bay Cities, and it's better to get something that's meaningful. But there are a fair number up in the North San Mateo County area. There's a couple over in Calhoun Bay and that kind of thing, but they're not big enough to have their own micro market area. So I'm trying to get a benchmark, and the biggest portion of San Mateo County is the Bay Cities on condos. So that's why I report that one. The offers accepted, DUI. So this tells you some idea what's happening with offers, because the inventory we've already talked about it, the active. To get DUI, the thing you need to do is to know the pace of the offers. And so you can see both single family homes have dropped from 15 to 13 and a half days in Santa Clara County and San Mateo County, from 19 to 18 and a half. The condos in both areas have dropped also. So the market is basically improving. And, 13 and a half days is a red hot marketplace. There's no other way to describe it. 18.6 is a red hot marketplace. Even 35, I have that neutral. I should have changed that over to red. I didn't notice that. Basically 40 to 80 is what I consider to be a balanced marketplace. So at 45, it should be neutral black. At 35, it should have been flipped over to a red font. Now you're looking at the frequency of overbidding, and this tells you how common overbidding is. And the range of 30 to 50 is sort of my definition of what normal is. So you can see in the single family homes, we're basically in both counties right around 80%, up slightly from last week, but not a whole lot. And then if you come down to condos, it's actually down from last week, and right around 2/3, 65% of the sellers getting more than their asking price. Then if you look at the magnitude of overbidding, you're at 109.5%, so almost at 110. You are at 110% in San Mateo County. And we've talked about this before. Even though Santa Clara County, by every stretch of the imagination, is a stronger marketplace, days of unsold inventory is lower, the inventory is lower, but yet the overbidding is higher in San Mateo County. And again, I believe it's because homes are a little bit more expensive. People that are able to purchase in San Mateo County have a little bit more money. If they want a house, they're willing to bid a little bit higher because they're maybe not as constrained by the financial need of the lender in order to get the house they want. And then the condos and townhouse marketplace is somewhere around 4% overbidding, so 104% of the asking price. Then if you look at appreciation, what we have is instead of going to last week, which would just be all over the place, I picked the peak appreciation for the year, and then we have the week. So back on June 29th, Santa Clara County single family homes hit their peak appreciation of 24.8% above all of 2020 pricing. Now we're down to 18%. So you can see this is some of that overshoot that I was talking about. And again, if you say an escrow takes 30, 35 days to close, this would have been closings in the end of May, and then I go back 5 weeks. So basically the closings at the end of the May were the peak of the overshoot that I was talking about earlier. And now we've established that 18% is sort of the step function increase for 2021. If we look at San Mateo County, its peak pricing came a little bit later, really close on magnitude, 24%, 24.1%. It dropped down, but now it's back up to 23%. So it's essentially very close to its peak, had very little overshoot in San Mateo County. And then if you do the same down in Santa Clara County, you can see condos have come down from 119% to 115%. Right now, this is pretty significant. In the Bay cities, all the major cities in San Mateo County on the base side of the ridge line are now below their 2020 pricing, where just back at the end of August, they were 16% above. A lot of that has to do with the sample size is pretty small. This is probably only about 90 condos, so you have a lot more fluctuation going on. But when you have surplus inventory, almost double the inventory you'd expect, you would expect prices not to really go up. So the fact that it went up 15% is pretty phenomenal. And that was a fairly short number. And you can see that it was pretty late in the year to the end of August. This gives you a little bit more of the price appreciation. I've tried to highlight the different peaks. So you can see some micro market areas are now coming up to new peaks for 2021. And there's a few that are still way back here. So like Santa Clara County peak overpricing was 24.4%, and you're down now at 18%, but 18% is up from these 16%. So this, if you really see this data, you might say that the step function increase that I was talking about is somewhere around 17%. So now why are we at 18.2%? 1.2% above that 17% number. Well, unfortunately, it could very well be some of the buyers are pulling in 2022 price appreciation into the tail end of 2021, trying to get something before prices go crazy on them next year. But if you're looking at this and looking at the handout, turn back to slide 5. So what you have now is the DUI, which is days of unsold inventory, what I believe is the single biggest indicator, supply-demand ratio in a free capitalist society that dictates future pricing. Somewhere between 40 and 80 is what I consider be normal. You can see the range in the different micro market areas. Above the white line is single family homes, first in Santa Clara County, then in San Mateo County, and then condos and townhouses in both counties. And in San Mateo County, I only report the Bay cities. Then you have the frequency of overbidding, and you can see the range. It looks like you may go from 60% of the sellers getting more than their asking price up to about 88% down here in San Mateo County North area. So fairly strong overbidding. Condos is quite a bit weaker. You can just see from the paler pink color that it's clearly not as a hot marketplace. Same goes with the frequency of overbidding. The days of unsold inventory are basically as hot as the single family. And so it's almost bizarre that your days of unsold inventory are down at these levels and your magnitude, your frequency and magnitude of overbidding is significantly less. And it could be on the magnitude of overbidding. People that are buying condos can very well be tighter financially and unable to bid over, even if they would like to bid over. And then you have the pricing. The pricing on single family homes, red are above the median, white is the median, blue is below the median. The number on the left is the 10 percentile number, middle number is the median, and number on the right is the highest 90 percentile number. In condos, there's only a handful of different micro market areas. So basically I did white for the highest area, which is the expensive areas in Santa Clara County. And then I color coded them coming down off of that. So the next most expensive areas is the Bay cities. And then after that, you're almost in a dead heat because you're 850,000, 840,000. And then the cheapest is 760,000. So when I'm color coding, I did a saturated blue on the lowest price, saturated white on the highest price. And because most of the colors are very close to the saturated blue, they're all blue. I don't know if that makes any sense, but the prices are there. And I do apologize for the font being a little fuzzy. It's just the way I'm getting it now. I am going to try to make it as clear as the other data points so it's easier to read. The next two slides are very similar. The first one is November, but I don't take November data till December the 6th. So for 2021, instead of doing data from November 1st through December 5th, I'm doing data from last night back 35 days. So I'm comparing 35 days, but they're a different 35 days. So we're not going to have apples to apples comparison. Some very noteworthy things is even though we're talking about the price appreciation and everything, the ask price of what's on the marketplace right now is 100,000, 120,000 below what it was just a year ago. What's the explanation? Well, the most likely explanation is a year ago, the high end of the marketplace wasn't doing as well. And so the high end properties made up a disproportionate number of homes proportional wise, and that raised up the median of what was on the marketplace. Because you can see when you went from 1.4 million to 1.8, that's a $400,000 increase in the ask price of what was available. And now we're down to a $300,000 increase. This does not mean that when you're going from 1.8 as a asking price down to 1.4 as a sale price, that those sellers were taking a $400,000 reduction on their price. It means that the makeup of what was selling was different than the makeup of what was on the marketplace. And you can see that by just looking at the median price of the offers accepted was 1.3. So the median price of what was being accepted was $500,000 lower than what was on the market. Now that differential is only $200,000 and more in line with where it historically is. But if you go back, every year is different. You go back to 2018, you were at 1.280. And if you go back to the offers accepted, you're at 1.189. So you're only $90,000 apart. So, you got to remember what statistics are. Statistics are a way of trying to understand a bigger concept than you're able to do without using statistics. Then what we're looking at here, I think the bigger takeaway is look at inventory. We only have 409 single family homes available at this time of the year. Through the end of the year, you'd expect this number to go down. If you look at these past years on December the 6th, which you'd expect this 409 to be even lower, the lowest number we had was 486. So we're already 20% below the lowest number we had. And I think we're going to be down probably another, 80 homes. And if we're down another 80 homes, we're going to be 40% lower. And if you go, well, that's not that crazy because we're right now at 60%, but we're at 60% of the 5-year median. So if you took the 5-year median here and of that, doing it real quick, you're probably somewhere around 706. And if you took 60% of that, you'd be at 420. So we're already below that number. So we're going into the year when we have the period of time when we have very little inventory, and we're going to have much less inventory than we normally do. And that's, what this is doing is sort of letting you foreshadow what the future is. So basically all your years in the past are November 1st through December 5th. The current year is last night, the 19th of November, back for 35 days. So this is earlier in the year. If you look at the average days and median days on the market for what's selling, that's a record low. Median days of unsold inventory, that's a record low. I mean, the closest year you're getting to is 2017. You're at 13 and a half days of unsold inventory now versus 21. You're at 20 days versus, you're at 18 days versus 20. You're at 8 days versus 10 on the median. I mean, that's insane. Volume is up. We're selling 1,050 homes. You have to come all the way back to 2011 to sell more homes than that. And generally, even though the valley has been growing every year, we are selling fewer and fewer homes. Just the median square footage and stuff. Now we get down to closings where we get the sale price, so we get overbidding. On overbidding, we're getting about 110% of the seller's asking price on average. That means some people are getting more. I've seen numbers around 146% of the seller's asking price, but I'm also seeing numbers around 83% of the seller's asking price. The sale price greater than the list price is about 82%. There's about 5% that are getting their asking price, so only 15% of the sellers are getting below their asking price, and I do not track that number specifically anymore. The median sale price is $1,620. That's 1.6 million, and you get down to the typical square footage and everything of the home. So typical home's 1,808 square feet, in line of what it's been. You can see that the typical home has been growing in square footage. So that would tend to suggest that homes that are selling now have been either added on to, or for whatever reason, we're selling larger homes now than we historically have. The number of closings is 1179. You can see that is a much higher number. In fact, you have to go further back. You have to come all the way back to 2005 before you get more homes that are closing. And the reason you can have more offers accepted is, one, it's a different, it's delayed by another month, but you also have different TFT periods in different time frames. Right now, the TFT ratio is pretty low, where maybe in 2012, the TFT ratio was higher, so you could sell more homes, but not close more homes. And then this is comparing apples to apples. The drawback of this slide is now we're looking at data back in the rearview mirror back on November the 5th, and it's data for October. So this allows you to compare where we were back in October. I like using both of them. I like the previous slide that we just finished better once you're after about the 15th of the month, because you're starting to have a good part of the data, 15 days out of 35, and you're starting to get a fairly good sense of where the data will come in. So that's why I put both of them in there for you. And again, this is the URLs. So if you want to look at the YouTube archive, you just type in the green one. If you want to participate in a live Saturday morning presentation at 9 o'clock, add in the year 2021. If you add in the year, month, date code, you get to the specific archive on YouTube, and the handout is up there. So anyone that wants to get it can get there. And just in general, I get the handout out right away, because all that is a PDF of the slides. So if I have them done, they're up there. I try to get them up about 15 minutes before 9, so you can print them out if you prefer. And that's all I have, unless there's questions. And if any questions, not seeing anyone, I'll call it a wrap. Have a good week, everybody.